So, welcome to today's presentation. My name is Peter Yusuf, Senior Market Analyst at IronFX. In front of your screens, you have WTIs for our chart. All charts that we presented are to be of the same time frame unless otherwise stated. Now, we are going to be noting at first with WTI. By the way, mind you that the WTI report, the full report, is due out later today. So, any of you oil traders out there are interested in it, keep a close eye on it. I would be highlighting as a first step, first of all, that the 75.65 support line is holding its ground. I'm a very happy analyst that we were able to predict the level correctly. And actually, we tend to note the possibility of the sideways motion to be continued. Now, we had yesterday the release of the EIA crude oil inventories figure. Now, the release as such tended to show an increase in US oil inventories, which more or less tended to weigh somewhat on oil's price. I would be noting, though, at the same time that it seems as if oil producers, after the freezing weather in the US, have restarted production and were able to catch up and actually surpass demand. So that's a factor which more or less may start weighing on oil's price, given that the supply side seems to be becoming stronger. For the time being, on technical level, we tend to maintain a bias for the sideways motion to be maintained above the S175.65. And that's being based practically on the price action over the past 24 hours. I would expect actually the price action to break below it. It didn't. And that allows us to maintain our sideways bias. For a bearish outlook, I would require the price action to breach the S175.65 and start aiming for the 70.25. At this point, I would also like to note that the RSI indicator, despite dropping below the reading of 15 actually quite considerably, it was aiming for the reading of 30 at some point, implying a bearish sentiment on behalf of the market. It has recovered and is nearer now to the reading of 50. It's actually right now at 46, more or less implying a rather indecisive market, or at least that intense bearish sentiment seems to be fading away and could allow the sideways motion to be maintained. The Bollinger Bands, on the other hand, have widened a bit, reflecting the downward motion of yesterday, and there seems to be an equilibrium right now. I would be noting that we have the 50 and 100 moving averages, the green and the orange line. Note how they are now moving in parallel, despite a drop in the inclination of the slope of the 20 moving average, which is also the median of the Bollinger Bands. For a bullish outlook, that may pose a challenge for WTI's price right now. Nevertheless, should the bulls take over, I would require the pair, or at least for me to switch my sideways movement bias in favor of a bullish outlook, I would require the the commodity price to actually breach the 79.15 resistance line and start aiming for the 82 resistance level. Okay, let's have a look now in the FX market, starting with Euro USD. Downward motion being maintained. And at this point, I would be noting here that this one was broken. Let's have a look at the release of the preliminary HICP rate of the Eurozone a couple of minutes ago. I haven't had the chance to check it out. This is the minute chart. And let's see what the release was actually about. So we had the release of The HICP rate is the preliminary rate for January of the Eurozone. It was expected to drop from 2.9 to 2.8. It actually did. Investing here shows an expectation even lower of 2.7. But in our opinion, it was expected at 2.8 anyway. On a core level, similarly, it ticked down on a year-on-year level from 3.4 to 3.3. So we have an easing of inflationary pressures once again, despite the jump in December. Yeah. So that was a peak which I think now is going to take a downward hill right now. That's good. More or less, such readings in the HICP rate may allow the ECB to ease on its hawkishness and actually proceed with more rate cuts or proceed more easily with rate cuts. Let's have a look at the market reaction at the time of the release as such. None. You can see how the major fluctuation at the moment of the release was at 4 pips, nothing actually. Yet there was some slight upward inclination in the following minutes. But more or less that reflects that the actual rates were expected by the market. Okay, back to the 4-hour chart. Readjusting it, the RSI indicator tends to remain near the reading of 40. Let's have a look exactly what it is. It's at 38.39. So there seems to remain a residue of bearishness in the market sentiment for the pair, which may drive it lower. By the way, we had also the Fed's interest rate decision that was yesterday in the late American session. Overall, the decision on a fundamental level did not bring anything new. Maybe there was a confirmation by Chairman Powell over his press conference that, okay, March is not a base case scenario for a rate cut. But the market had already priced in that. The market was expecting already the first rate cut to be in May, so nothing much. Overall, though, if one reads the accompanying statement, there is an intense feeling that the Fed seems to be taking its time regarding rate cuts. There is no major rush in starting to cut rates. So more or less, we tend to maintain the view that most probably the bank will remain on hold for a prolonged period. Now, the market expects the Fed to proceed with its first rate cut in the May meeting. In our opinion, I would expect actually the Fed to proceed with the first rate cut a little bit later, probably in the summer, June or July. And I'm placing more weight on July. I expect the Fed that it would like to see this inflation dropping to the bank's target of 2% and staying there for a period before actually starting or proceeding with rate cuts. Should such a scenario start materializing or be reflected in comments or statements made by Fed policymakers, we may see the USD being supported at the monetary policy level. And I think that's more important. Now, should the bearish sentiment continue to drive Euro USD lower, I would expect it to aim, if not breach, the S1 1.0740. At this point, let's have a look where the S1 is based, and you can see a beautiful cap and handle right here. And note how the level signaled the bottoming out of the pair at that period. It was very indicative. So that's pretty valid. Other than that, to the upside, should the bulls take over, I would expect the price action to breach the 1.0830 and start aiming for the 1.0925. Now, there are some analysts which highlight that the downward trend line is actually something like this. I'm a little bit more conservative here. I would expect that the price action was in a downtrend like here, but that was interrupted. That the sideways movement here was very characteristic. And at this point, I would be noting also though that the bearish tendencies have begun once again. Yet for a bearish outlook, I would require a clear break of the 1.0740. Let's have a look now at USD/JPY. Okay, USD/JPY edged lower. That was an indication of the weakening of the US dollar. And if we drill into the 1 minute chart, let's have a look at the time of the release, what the reaction actually was. Mind you that USD/JPY showed the widest fluctuation at the time of the release of the Fed's interest rate decision. And it wasn't much, but it was something. We expected it to be on USD/JPY given the current rate. We're talking about 70 pips. Note how there was a jump, actually a drop, then a jump, a correction lower, and then once again up. Back to the 4-hour chart, readjusting. Given the relative stabilization of the pair's price action over the past 12 hours, I would expect USD/JPY to maintain a sideways motion. But, and this is a big but, the RSI indicator remains below the reading of 50. Still, it's actually right now at 40, implying a residue of a bearish of a bearish sentiment within the market. And that may be driving at a future stage USD/JPY lower should the bearish sentiment for the pair intensify within market participants, among market participants. Now, should the bears take over, I would require a clear break of the 146.60 and the pair to start aiming for the 144.45. On the flip side, should the bulls take over, we may see the price action rising, breaking the 148.60 and start aiming for the 149.70. I would require nothing less than a clear break of the 148.60 for a bullish outlook. And I'm saying this because I would require a higher peak than these ones. Anything which shows a price action in the corridor set between the R1 and the S1, in my opinion, is a sideways motion. Now, a small, I wouldn't say contrarian view, but another interesting view which is being mentioned is that we had a peak, a lower peak, another lower peak, and you had a true and a lower true, which tends to imply a bearish outlook. In my opinion, such a viewing of the pair's price action may be somewhat incomplete. It practically ignores the relative stabilization of the pair, which was noted here. And this job, for the time being, is a once-off. For a bearish outlook, I would require once again the price action to start forming lower peaks and lower trues, so it has to breach clearly the S146.60 support line. And not only that, the S1 should be used, in my opinion, also as a resistance line. Prove its worth as a resistance line. Only then I would be discussing the possibility of a bearish outlook for the pair. Okay, let's have a look at GBP/USD, especially given that we have also on the fundamentals BOE's interest rate decision. Let's readjust a little bit the labels. Now, the sideways motion between the 1.278 resistance line and the 1.26 support line is more than evident. You can see how the majority of the main body of the price action remained within that corridor, despite some ups and downs, etc., etc. Yes, but it was not able to escape it clearly, with the one exception maybe here. But it once again fell within the corridor. Also note how the 100 and the 200 moving averages are moving in parallel, flattened out. Now, some slight bearish tendencies are present, and they are evident by the fact that 20 moving average has started to slope downwards. And at the same time, note how the price action of the RSI indicator has lowered. It's currently at 39.5, more or less implying a bearish predisposition on behalf of the market. Yet once again, for a bearish outlook, I would require a breach of the 1.26 support line, a level that was tested here, aimed for once, twice, 3 times. So in my opinion, that's a signal for a bearish outlook. It's the first signal that once the S1 has been broken, watch out, the bears are here. And I'm talking about a clear break, nothing like this here to the upside. I mean about a clear break, the price action pointing towards the 1.2445, which would allow us also to draw a nice clear-cut downward trend line. On the flip side, should the bulls take over, we may see the price action breaching the R1 1.2780 and start aiming for the R2 1.2880. Once again, base scenario is for the price action of cable to remain between the R1 and the S1 for the time being. And I'm saying this despite BOE's interest rate decision being due out in a couple of hours from now. Now, the bank is widely expected, to remain on hold. That's not the question here. The big question is whether the bank's going to be signaling that rate cuts are coming or not. And in my opinion, most probably they will not signal such a scenario, at least not yet. We may see, on behalf of the bank, a recognition that rate cuts within the year are possible, but at the same time may highlight that it would be premature to start discussing them. So I would be placing substantial emphasis on the release of the accompanying statement and BOE Governor Andrew Bailey's press conference later on. I think he's due to speak about 2 hours later than the release of the interest rate decision as such. I have to check the timetable to be more exact. But I would expect volatility to increase for cable at those 2 periods. Now, there is a catch here. And the catch is that cable was unable to breach either the upper or the lower boundary in past events. And we're talking about events which span out up until the middle of December. So the chances of actually cable breaching either the upper boundary, the R1, 1.2780, or the lower boundary, the S1, 1.26, are pretty slim. Should the bank actually, though, signal that it intends to maintain interest rates at high levels for a prolonged period, that could provide some support for the pound. And such a scenario could be based practically on the CPI rate. We have seen a UK CPI rate which has been slowing down considerably for the past year, but 2 elements. A, it unexpectedly rose a bit during December. And I would also be highlighting that currently the CPI rate is at 4%, which is twice what the bank's target is, 2%. So the release as such for the December CPI rates of the UK tended to highlight the need on behalf of BOE to continue with a tight monetary policy up until the inflation has dropped to acceptable levels, which would be the bank's target of 2%, and seems ready to stay there, nothing less. So most probably we may see the bank maintaining, I wouldn't see a hawkish stance, but I would say a confident, prolonged, tight financial environment stand, nothing less. Also keep an eye out for the vote count. Should we see more MPC policymakers seeing the need to maintain rates higher or even hike rates, then that would be another indication for the pound to rise. Okay, let's have a look at USD CAD. CAD, which seems to be weakening against the US dollar, given that the USD is pushing the pair upwards, USD CAD. And at this point, definitely the R1 has been breached and has been turned into a support line once again, proving exactly that this testing was only temporary. Let's go hunting for a new ultimate resistance line. This is a level which had continuous testing. I'm going to be skipping the shadows here and here, and I'm resting actually the resistance line on the price action, given that that level provided continuous resistance in the period of the early November days between the 8th and the 12th of November. Let's color this in red. It would be the 1.3825. And could go 30. Let's have a look. Yep, that's better. Let's correct also the labels. Readjust the chart. Starting with the S3 being placed now at 1.3180. The S2 at 1.3320. The S1 at 1.3410. The R1 at 1.3540. The R2 at 1.3675. And finally the R3 at 1.3830. So we tend to maintain, or actually let me rephrase that, given that even if we shift the downward trend line which was guiding it a little bit to the right, you can see how the price action has clearly broken it, and that tends to reflect more or less an interruption of the downward motion, highlighting the possibility of a sideways movement. So we tend to adopt now this bias for the sideways motion to continue possibly between the 1.3540 and the 1.3410. The RSI indicator has breached the reading of 50, it's above it, more or less highlighting the end of the bearish sentiment, yet remains unconvincing about the buildup of a bullish sentiment. So more or less, in my opinion, that tends to imply some ambiguity regarding the market's intentions and may allow the sideways motion to continue. Also note how the Bollinger Bands have narrowed, highlighting low volatility for the pair. Should the bears regain control over the price action of the pair, I would expect USD CAD to breach the S1 1.3410 and aim for the S2 1.3320. On the flip side, should the bulls take over, I would require a higher peak than this one for bullish outlook. So I would require the pair to rise, breach the R1 1.3540, and start clearly aiming slowly but steadily the 1.3675. That requires a day or two with a pretty strong bullish sentiment. But we have to note that volatility in the past had shown us that it's possible to cover the ground within 1 day, even less. Now, on a fundamental basis, okay, we have, if I'm correct, Canada's GDP rate today. No, it's the manufacturing PMI rate. Now, Canada's manufacturing PMI rate for January is due out in the early American session today, actually a little bit before the American session starts. And the latest reading that was for December was at 45.4, more or less highlighting a contraction of economic activity for the manufacturing sector of Canada. Now, should that reading drop further, implying another deeper contraction of economic activity for the sector, I would expect the CAD to weaken further. And such a scenario is quite plausible given we have a tight monetary policy on behalf of BOC, which is delivering a hit on the manufacturing sector right now. And it's not only in Canada, it's everywhere. Okay, let's have a look at AUD-USD. But before we move to AUD-USD, let's have a look at the price action of oil, given that CAD is positive correlated with oil. We had that look before. So we see here that it's not a factor. Why? Because WTI prices, despite falling, have remained stable, but the CAD side is still weakening. Let's move now to AUD-USD. That's up. This is AUD-USD's 4-hour chart. And people, we have a clear-cut chart. The price action is now moving just below the S1 0.6525, but in my opinion, it's going to be breaking it. There's more way for the bears here. And I think that would be more obvious if we drill into the 1-hour chart. Yeah. Back to the 4-hour chart. I'm going to be switching the S1 to a resistance line, given that the price action is currently below it. And let's go hunting for a new ultimate support line. Unlocking the chart, going back, way back. Here you are. Nice true here. Let's go further back to see if there's anything else. Back, drilling out to the daily chart. Nope. Now we're back in March 2020. The level has provided resistance here and support here, so that was an indirect confirmation. I'm keeping it. And that would be the, in green, 0.6170. Let's readjust the labels as well. S1 is being now set at 0.64. The just broken support line now turned to resistance R1 at 0.6525. The R2 at 0.6620. And the R3 at 0.6725. Now we highlight during tomorrow's Asian session the release of Australia's PPI rates for Q4. They're expected to ease, and such a deceleration of the PPI rate would practically more or less, in my opinion, support also the deceleration of the CPI rates, which, yeah. Give me a sec, sorry. Yeah. Now, the deceleration of the PPI rate would more or less highlight or support, if you prefer, the deceleration of the CPI rates, showing a qualitative factor in the easing of inflationary pressures in the Australian economy. Now, this could more or less, in my opinion, also highlight the possibility of RBA easing on its hawkishness in the interest rate decision next week. If I'm correct, the interest rate decision of RBA is due out on Tuesday's Asian session. And that's the next big test for the Aussie. For the time being, once again, I'm highlighting the downward movement. The RSI indicator is falling, and currently it's at the reading of 34.6, aiming for the reading of 30. There is a bearish sentiment building up in the market for the pair, which may drive the pair towards the S1 0.64 support line. I'm not saying that it will touch it, but the direction seems to be clear. Some corrections higher would be expected, but I would require a clear break of the R1 0.6525 and a breach of the 0.6620, a prior resistance line, for my change for a bearish outlook to change. Sorry, for my outlook of a bearish movement to change. Okay, let's have a look at gold. There you are. Another strong downward movement in the 1 hour chart. And that's, in my opinion, an indication becomes even stronger in the 4 hour chart. That's an indication, in my opinion, of a strengthening of the US dollar. You can see this movement practically across the board right now. I'm not saying it will not be reversed, it could be reversed. But for the time being, the USD seems to be gaining ground. And it's interesting how gold has now interrupted its upward motion and is falling. So practically, should the downward movement be maintained, I would be switching my upward, or if you prefer, bullish outlook for the precious metal. And now, depending how wide the drop will be, it's going to be interesting to see how also the outlook changes. Let's have a look at the daily chart here. Okay. You can see how the price action of gold was able to cover such distances from the R1 to the S1 within 1 day easily. Back to the 4 hour chart. Now, should the price action be able to breach below the S1 2013, that would be, in my opinion, a very clear-cut, intense bearish signal. The RSI indicator has reached the reading of 50, implying that the bullish sentiment has faded away, and the market is now considering what the direction of the precious metals next leg will be. On the other hand, should the price action be able to breach above the R120.38 and aim for the R220.75, we may see the movement being considered as a false break and a continuance of the bullish movement. So we're in a make or break position for gold's price outlook. It's going to be a very interesting American session today. Okay, let's have a look at US stock markets. And I would like to have a look at NASDAQ. And the main reason I'm highlighting NASDAQ right now is due to the earnings which are to be released later today. We're getting a number of high-profile mega cap tech companies, and I'm talking about Apple, I'm talking about Meta and Amazon. So after Google and Microsoft, those were on Tuesday, we're focusing on another three major companies of the tech sector. And I think most of the market interest this week has revolved around this sector. Now, on a fundamental level, I would be noting some worries about Apple, as there have been reports surfacing in the media that demand for mobile phones seems to be easing, which may have an adverse effect on Apple. On the flip side, though, we have to note here that there was another report which highlighted that Apple outperformed Samsung, its main competitor, in the sales of mobile phones, which would be a positive. But in an absolute manner, should the demand side for mobile phones start easing or even dropping, we may see more or less a negative hit on Apple. And I think the release of the earnings report today is going to be a nice opportunity to start discussing Apple once again. As regarding now Amazon, besides the EPS and the revenue figures as such, okay, I would also be discussing, I would like to see how the cloud segment of the company is doing. If you look at Microsoft and Google, the cloud segment and AI were two major issues which tended to be discussed by investors. So I would expect Amazon to have a similar discussion here. And as for Facebook, actually, I'm worried on two issues here. Okay, first, definitely the one is the scrutiny by US lawmakers on such platforms, and especially Facebook, given that Facebook also owns Instagram, or if you prefer, Meta Platforms owns Facebook and Instagram. And should such scrutiny actually intensify, we may see it weighing somewhat fundamentally on Meta's price. On the other hand, on a pure financial basis, I would like to express here my worries about the Meta project that Facebook has embarked in, yet it does not seem to have been delivering results. And on a third level, also on the financial level, I would like to see how the advertising revenue is coming for Facebook. It's a big issue. It was raised also for Google. I think that it will be a major issue also for Facebook, as we see that the tendency for advertising has started to ease somewhat and could mean trouble for Meta or for Facebook, if you prefer. Anyway, on a technical level, regarding NASDAQ, for the time being, we tend to maintain our bullish outlook. Yet I would be highlighting here that the upward trend line, which has been guiding the index, seems to be put to the test. Now, should the price action of NASDAQ actually breach the upward trend line, then I would be switching my bullish outlook in favor of a sideways movement bias. May I remind you guys that this is the daily chart of NASDAQ. Now, for a bearish outlook, I would require a breach of the upward trend line, which exactly would be signaling an interruption of the upward movement. But I would like also to see it breaching the S1 16,980, a level which posed a resistance in the past and now has been turned into support line, given that the price action is above it, and start actively aiming for the 16,165, a level which held against the downward pressure in the past when we're talking about early to mid-January, while it has also provided resistance in the past, late days of November. For a bullish outlook, I would require a higher peak than this one. So the price action has to actively start aiming for the S1 18,000 resistance line. May I remind you guys that this peak is practically an all-time high. And the bulls may find it difficult to actually advance higher. May I also point out that the RSI indicator has dropped, is near to the reading of 50. It's actually right now at 58, implying that the bullish sentiment has eased. It's still there, but it has eased considerably. Now that should sum it up from all of us here at IronFX. Best wishes for solid trading.
Refuses to give head. And over. So the same happy. How do you know that? It's not true. You also laughed. No, I'm not laughing. You are laughing. Okay. I hate you.
My name is Emily and welcome to another one of our videos. Today we'll have a look at currency carry trade. A currency carry trade is one of the most famous trading strategies in forex trading. A currency carry trade is when you buy a currency with a high interest currency against a low interest currency. Carry trading involves holding a forex trade when one currency has a higher interest rate than the other currency in the pair. The most famous carry trades involve buying currency pairs like the Australian dollar against the Japanese yen and the New Zealand dollar against the Japanese yen, because these pairs have interest rate spreads that are very high. A trader can make a profit between the difference in the interest rates of two currencies as long as the exchange rate between the currencies does not change. Many professional traders use these currency carry trades because the gains can be very big when they use leverage. However, the bigger the potential gain, the higher the risk. The currency that is exchanged in a currency carry trade transaction is known as the funding currency. A funding currency usually has a low interest rate. Traders borrow the funding currency and take short positions in the asset currency, which has a higher interest rate. The best time to get into a carry trade is when central banks are raising or considering raising interest rates. Also, these trades work well during times of low volatility since traders are willing to take on more risk. As long as the value of the currency doesn't fall, even if it doesn't move much or at all, traders will still be able to get a return. However, a period of interest rate reduction does not provide great gains in carry trades. When rates are falling, demand for currency also tends to fall and selling off the currency becomes difficult. Basically, the carry trade can result in a profit if there is no movement or an increase in interest rates. Hope you found this video useful and interesting. Thank you so much for watching us. Bye-bye.
Okay, thanks for waiting, everyone. Let's go ahead and get started. Okay, first things first, as per usual, a risk warning. Our products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risks involved. Disclaimer, the information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the opinion of the author, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein, and redistribution of the material is strictly prohibited. Okay, so I'm Melanie. I will be your speaker for today. I'm an investment analyst from Everest Fortune Group, who were finalists for Best FX and Equity Research in the years 2019 to 2021. So here's our agenda for today. Firstly, we're going to look at the anatomy of a trade, and then why exactly you shouldn't use a fixed take profit or fixed stop loss. And then we'll talk about what is the proper stop loss and take profit placement, followed by dynamic stop loss and take profit placement. Okay. So the anatomy of a trade. So a trade basically consists of three basic components, right? We have the entry, which is where you place your orders, and then you have, of course, your stop loss as well as take profit orders. Okay, so in order to manage a trade, it's important to understand what it consists of. So in this webinar, we will be introducing the basics of trading, which are the three that we just went through. And we'll go through break even, partial profit, idea and validation in part 3, and part 2, and trailing stop loss in part 4. Okay, but it's important to know all of these as well. Okay, so trade management basically refers to the process of managing open trades in the financial markets to maximize returns and minimize risk. Okay, so here are some reasons why it's important to have a proper trade management strategy. Okay, firstly is to control risk. Trade management strategies such as stop loss orders and position sizing help traders to limit their potential losses and manage their overall risk exposure. Next, we have to maximize profits. So trade management strategies such as take profit orders and trading stops basically help traders to lock in their profits as well as maximize returns. Thirdly, manage emotions. So the discipline and structure that trade management or having a proper trade management strategy provides can help traders to stay calm and rational even in very volatile markets, which can prevent impulsive decisions driven by fear or greed. Okay. 4. Improve trade efficiency. So by having a well-defined trade management plan, traders can make faster, more informed trading decisions, okay, and avoid the cost and time of having to constantly monitor and adjust their positions. So for many traders who have full-time jobs, if they have a proper trade management strategy, you can actually just lock in your trades and then ensure your stop loss, take profit levels, maximize your profits, and then just go about your day and then come back at the end of the day to check your results. Okay. Lastly, we have to increase consistency. So effective trade management helps traders to achieve consistent results over time by reducing the impact of individual losses and maximizing the impact of winning trades. Okay. So let's start off by going through the issue of having a fixed take profit or stop loss. Okay, so firstly, let's take a look at this example. So the red area over here, you can see this red resistance level here. So this shows us a strong resistance area since we have two swing highs, or we can see that price has reacted off this area twice. Okay, and it aligns with this red area that we've highlighted. So if our trading strategy requires us to have a fixed take profit of 100 pips, okay, look at our point 2, take profit of 100 pips. This would place the target beyond this strong resistance area. Okay, so our entry is over here, and we're expecting price to go from our entry to this resistance level here. Okay, and this is how it plays out. Price shot up, right? So our target profit was at this resistance level, and price did shoot up as we expected, but it missed our take profit target by a couple of pips, and then it reversed back down to our entry. And the reason for this is because price often reverses off of big areas of resistance and support. So if you have a confluence area like this, often supported by, it would be better to support it with Fibonacci levels, pivot points, whichever levels you prefer. But if you have a confluence area, it tends to attract price, but you would also see price reversing off of these big areas of resistance or support. Okay. Now, in an alternative scenario, if we had placed our take profit before the key resistance area, we would have gotten a profitable trade. So if we had placed it slightly below, okay, we would have caught price before it reversed. Okay, so the important thing to note from this is to look at the charts and adjust your take profit and stop loss levels accordingly, and not just blindly follow a fixed take profit target, such as 100 pips like we did over here. It's always important to look at the charts and then adjust accordingly. Okay. So this is our general guideline to follow for proper stop loss or take profit placement. So if we're looking at having our stop loss at a major resistance area, we will place our stop loss beyond it. So in this case, it will be above it. Whereas if you're looking at placing your take profit at a swing low, okay, we would place it before a major support area. And of course, it would be the opposite if it's switched around. Okay? Yeah, but this is typically the proper stop loss and take profit placement that we recommend to ensure you maximize your wins and minimize your losses. So your stop loss should be always placed beyond any confluence area, while take profit should be placed before. But we'll go through a couple more examples over here. Okay, so trade management with Fibonacci confluence. We mentioned earlier that your stop loss should be placed beyond a key Fibonacci confluence area, but of course, when we say Fibonacci confluence, it can be Fibonacci, it can be pivot points, as I mentioned earlier, it can be just a bunch of different levels that line up in the same area. That's basically what a confluence area is. And the reason for that is because price is attracted to these strong areas of confluence, be it Fibonacci or whichever indicators you prefer to use. And if your stop loss is right before instead of beyond your confluence area, the chances are that you will most likely get stopped out before the market reverses. Okay, and that's basically one of the reasons why most people might wonder why exactly they got stopped out right when the market starts to reverse. And then they often complain about stop hunting. Okay, next, let's look at take profit. So in this situation, you can see that our stop loss is placed below. Okay, it's our Fibonacci confluence in this case is a support level. So if we look at our previous, our stop loss is at the swing highs, whereas our take profit is at the swing lows. Whereas if we look at this example here, it's flipped just to show you guys what exactly you can expect. Okay, so in this case, we're going for a buy entry, and here we are looking at a sell entry. Okay, but the idea here is still the same. Stop loss beyond, take profit before. So over here, you see our buy entry take profit is before the Fibonacci confluence area here, and our stop loss is beyond it, so it's below it in this case. Okay, the reason for this once again is that when price reaches the Fibonacci confluence area, there's a high chance that it won't be able to go beyond it because of the resistance at that level. So instead of reaching your profit target, we can often see that it will reverse back to your entry or worse, your stop loss. Okay, and this is another reason why people complain that the market is being manipulated because they might miss their take profit by 1 pip. Okay. Feel free to let me know if you guys have any questions throughout the webinar. Okay, all good. Let's move on. So in this example, we are looking at why you shouldn't have a fixed stop loss. So here we have a support level with two swing lows in line with one another. So you can see here, one swing low here and one swing low here. So this gives us a really nice support level. And we can see that price has bounced off of this support level, okay? And we are expecting price to continue to rise to the swing high resistance over here. Okay, so our stop loss of 100 pips is fixed at the 1894.75 level at the support level over here. Okay, this yellow highlighted area here. Okay, and price goes down instead, touches the stop loss and perfectly bounces off from the support. Okay, so your stop loss is here. Remember, as our previous slide, stop loss is here, and we're going in for a buy, thinking that price will go all the way up to our resistance over here at 1931.43. Okay, but instead it reverses and it bounces off our stop loss. Okay, so the reason for this once again is that price tends to get attracted to key levels of support, especially since in this case we see price reacting off of it twice already in the recent past. So we can likely expect it to bounce off of this level again before shooting back up, which is one of the reasons why what we should have done instead was to place our stop loss, so this yellow area, slightly beyond the key level so that we are not stopped out at the support, as prices tend to be attracted to key levels of support and bounce off of them. Okay, so this is why it's important to have dynamic stop loss and take profit placements. So dynamic stop loss basically is a trading strategy used to manage risk, in which the stop loss level is adjusted dynamically based on market conditions. Okay, so the level of the stop loss is continually moved to a more favorable position as the price of an asset moves in the desired direction. The goal of a dynamic stop loss is to lock in profits while minimizing potential losses. And the placement of the stop loss can be determined by various technical analysis indicators or other market conditions, such as volatility or market trend. Okay, here's a simple example to demonstrate dynamic stop loss. Price has bounced off nicely off of this support level of the 86.721, as we see here. Okay, and we're expecting it to reverse off of our entry here, 87.819, in line with this 100% Fibonacci projection level. Okay, so we see price testing this entry level that's in line with the 100% Fibonacci projection. Okay, and we also see that we have a stop loss level at this swing high here, but we're placing it slightly beyond it, in line with the minus 27.2% Fibonacci expansion, as well as another 61.8% Fibonacci projection. Okay, yeah, if you're wondering what these Fibonacci techniques are, feel free to let me know in the chat. We basically go through the different Fibonacci techniques in our Fibonacci series, but if you've missed that, I don't mind going through it a little bit after our slides when we're going through some charts. Okay, yeah, so price is currently testing our entry level and we're expecting it to drop back down to our take profit at the 86.721. Okay, so as we mentioned earlier, our stop loss was placed below, but of course, instead it should be placed beyond the major Fibonacci confluence area. Okay, and we will show you why in our next slide here. So you can see if we had placed our stop loss exactly at this Fibonacci confluence area, we would have been stopped out. You can see it touched on the Fibonacci confluence area perfectly and before reversing off of it back down to our entry. Okay, so if we had placed it here, we would have gotten stopped out. And once again, the reason is because price is often attracted to such strong areas of support or resistance before reversing off of these areas. Okay, so price reversed perfectly off our confluence area and hit it back down towards our take profit. Okay. So now let's look at another example. Okay, so here we're expecting price to bounce off of our entry here at the 87.625 level. And this is a pullback pullback resistance that's in line with a 78.6% Fibonacci retracement. Okay, what a pullback resistance basically means, I think we'll go through this in a little bit. Maybe not. Yeah, maybe not. But a pullback resistance basically is when price has retraced this level. So we have a swing low here, right? And price has broken out of this level, surpassed it, and is now heading back to that area. That's basically what a pullback resistance or support level is. Okay, so we're expecting price to reverse off of this level, this entry level here, and our take profit is at the um, swing low support at the 84.668 level. Okay, meanwhile, our stop loss is at the swing high resistance over here at 88.533. So price has hit our entry and has reversed nicely off of it, as you see here, and is now heading towards our take profit. So you can often expect price to test significant levels of confluence like we see over here in our entry and like we've seen in our previous examples as well. You can often see price testing the level before reversing off of it. Okay, so that's the reason why we say that it's important to have a good trade management strategy so that when you encounter these kind of issues, not really issues, but like situations, then you won't get so emotional and want to change your stop loss or take profit levels or change your trade, because then you can believe or you can trust in your trade that it will eventually work out in your favor. And if it doesn't, you have dynamic stop loss techniques to help you to minimize your losses. Okay. So dynamic take profit placement here. Our take profit is in line with a 78.6% Fibonacci projection. This is wrong. It should be projection instead because we have 3 points and we are using kind of like a flash shape over here, or like a lightning bolt shape. Okay, and our 78.6 is in line with our take profit. Okay, so then we can see that price worked out just exactly as how we expected it to and touched our take profit before reversing off of it. Okay, so we just managed to catch this trade over here before it reversed off of it. And you can see it's a good thing that we placed our take profit slightly above this 78.6 level and also above the swing low so that we were able to catch this before it reversed off the take profit and headed up to our stop loss. Okay. So another example here, in this example, we are seeing price break out of this descending trend line. So just to recap, a descending trend line, in order for a trend line to be valid, it needs to have 3 levels, or rather 3 touches on that trend line. So here we see 1, 2, 3, actually we have 4 in this case, right? But we see price breaking out of it, which is giving us a bullish signal. Okay, and so our entry level is placed at this overlap. And basically what an overlap level is when the bulls as well as bears are respecting that area. In other words, you see the swing lows and swing highs respecting the area. Okay, making it a pretty significant area. So here we have our entry level as an overlap resistance, okay, and our stop loss, it is just at this swing low here. And you can see our take profit is in line with a minus 27.2% Fibonacci expansion, 127.2% Fibonacci extension. I think it's also in line with a 78.6% Fibonacci projection. Okay, so you can see price, we are expecting price to rise above this entry level and hit towards our take profit and amongst this Fibonacci confluence area. Okay, but we see that our take profit, when it's placed above the confluence area, it actually missed price by a few pips because price reversed off of this confluence area. and reverse back down to our entry. So same idea over here, our take profit should be placed below the confluence area. In this example, we're kind of placing it a lot lower than the confluence area, but in reality, you don't actually need to place it so much lower. You could actually just place it right below the confluence area and would have been fine as well. Just as long as your take profit is placed below it or before a major confluence area, price is more likely to hit your take profit before reversing back down to your entry or even worse, your stop loss. Okay. Okay, that's it for my slides. Now let's take a look at some charts and see if we can implement what we have done so far. Okay, so let me know in the chat if you guys have any requests for any charts. Okay, let me just connect in. Okay, I think we have a request for AUD. Yeah, okay, we'll definitely go through that. Okay. Okay. So I typically like to start off by looking at the higher time frames. Wait, can you guys see my charts? Yes, okay. So I like to start off by looking at the higher time frames so that we get an idea of the general direction of where prices are headed towards. Okay, so I'm gonna start off by looking at the weekly time frame. And on our weekly time frame, we see um prices moving in this downtrend. Let's see if we have a channel. Okay, we don't have a channel, but we have a very obvious descending trend line here. Remember I just mentioned that in order for it to be a valid trend line, we need at least 3 touches. So we see 4 touches over here. Okay, so downtrend on our weekly time frame. Let's take a look at our daily time frame. Okay, daily time frame is also pretty yeah, price is moving in this descending trend channel as well. Let's just go in with like really quickly with some support and resistance levels. Okay. Okay, here's my first resistance. Um, yeah, first resistance. And then my first support is just gonna be here. And then my second support just here. Okay. So these are just solely based on graphical levels. So I'm just looking for swing lows as well as some overlap levels. So if you guys weren't here for our support and resistance webinar, this is basically what we call an overlap um, support level. Okay, because you can see that we have swing highs as well as swing lows that are respecting this area. Okay. So that's why it's a significant level because price has tested it many times before. Okay. Okay, so we see price kind of reversing off of our first resistance here. I think I wanted to point out as well that let's take a look at RSI. Okay. Okay, over here we have a bit of a divergence. Okay, we have prices moving upwards on our daily time frame, whereas over here you see price dropping, or rather price making a lower low. Okay, so this is what we call a bearish divergence, okay, because we see price moving upwards, or rather price making a higher high on our price chart, whereas on our RSI price, or rather on our RSI, we see that it's making a lower high. Okay, so this is basically what it means. You can see it's making a lower high, whereas here it's making a higher high. So this is basically a sign, I guess, that price is likely to drop from here, and we can kind of see it already dropping. Yeah. Okay. That's all for daily time frame. Now let's take a look at our 4-hour time frame. Okay. So on our 4-hour time frame, it's actually pretty bullish. Okay, we can see, I think, okay, we have a ascending trend line. Let's see if we have a trend channel as well. Wait, no. Okay, but we have an ascending trend line. Now let's go in with our support and resistance levels. Okay, here is my first resistance. And the key to this is that you want to make sure that you try and pull back your levels as far as you can, so that you can see how significant these levels are. So like in this case, you can see that this is an overlap level because I have swing highs, mini swing highs, and mini swing lows respecting it. Okay. Yeah, but you don't want to cut through too many bodies of candlesticks. Okay, so if you just cut the wicks like we see over here, just the wicks are fine. Yeah, but preferably not the bodies of candlesticks. Okay. And this will be my second support. Okay. Okay, if I zoom in really closely, I can see that my 50% level lines up nicely with my first support. Okay, so I'm gonna keep that. Yeah, I'm looking for a projection here. And I can see my 78.6 lines up nicely with my first support. Okay, now I'm looking for an expansion. I think we will have an expansion here. Or maybe not. Okay, so for expansions, we are looking at the negatives. No, we don't. Okay. let's see what else we have. So you can see here I'm following the shape of the chart really closely. So that's quite important to note as well. Okay, my 61.8 also lines up with my first resistance. Okay, it doesn't have to line up exactly because we're typically looking for areas and not so much specific levels. Okay, so as long as they are like kind of near the area, that's fine. Okay, so we can see my first support is a really significant area. Okay, because I have this overlap support level as well as a 50% and 61.8% Fibonacci area, confluence area. Okay. So based off of our two let me just see if we have a trend channel here. I might have missed it. Yeah. Okay, so we have an ascending trend channel here. The trend line that I drew earlier was incorrect, and I didn't realize it until now. Okay. Okay, but even though on our 4-hour chart it's pretty bullish in the sense that we see price moving in this ascending trend channel. You guys remember our daily time frame gave us bearish. Our weekly time frame was also pretty bearish. Okay, so just keep that in mind. I'm expecting price to continue to drop towards our first support. Still within this ascending trend channel, of course, but simply because of this confluence area here. Okay, but I think it will react off of it. Let's take a look at some indicators, okay, to support our analysis. So we're expecting prices to drop towards our first support. Okay, MACD is giving us bearish, Ichimoku is giving us bullish, so I'm going to remove that. Let's take a look at RSI. Okay, once again, RSI is giving us a yeah, bearish divergence. Okay, you see price making a higher low, higher high over here. Okay, price is making a higher high, whereas on our RSI, it is making a lower high. Okay, let me know if that's confusing. I'm not sure if I explained that clearly. Okay, but basically what we are looking at is this highs. Okay, so you see this high as well as basically like the peak of the chart. Okay, we see that over here at the same area that we're looking at, right? That I've highlighted with the vertical lines. The peaks are higher on the chart, whereas on our price chart, whereas on our RSI chart, it's our peaks are lower. That's just basically what it means. Okay. Yeah, so that's our bearish divergence here, giving us a bearish signal. Maybe we'll take a look at Bollinger Bands. Okay, that's not really telling us anything. Let's look at stochastic perhaps. Okay, stochastic is also giving us a bearish divergence over here as well. So for divergences, you can take a look at either RSI or stochastic. They often give you if you're looking for divergences, they're the best indicators to use. Okay, so you see here that's slightly lower Okay. Okay. So once again, just to like wrap up, I'm expecting it to drop here towards our first support. But after our first support, we'll probably see it reverse back up to our first resistance because of this confluence area. So it'll attract it and then it'll reverse off towards our first resistance. Okay. Okay, I think we have another request for gold. Okay, let's take a look at gold. Okay. Same thing, I'm going to start off by looking at our higher time frames first. And on our higher time frames, we kind of see an uptrend, okay? On our daily time frame, we also see an uptrend. Let's see if we have a channel here. Probably not, okay? But you can see it's a definite uptrend here. Okay, and on our 4-hour time frame, it's also pretty bullish. Okay, so we typically will recommend to trade according to the trends. So just follow the trends unless you're using an indicator and it tells you that there is going to be a reverse in trend, and those yeah, then of course you can go in with you can go the opposite, follow the opposite of the trend in that situation. Okay. So firstly here, this is going to be my first resistance. Okay. This is my first resistance. And then okay, I think I will place my first support over here. Okay, so this is an overlap level as well. We have a swing low here and a swing high here that line up. Okay, and then let's see. Okay, I think our first resistance can go all the way back here, and I'm gonna see if this level can be supported by any Fibonacci levels. Okay, so I'm looking for our projection here. Okay, let's see if we have any other levels. Oop. Okay. Okay, I can see this 161.8 lines up with my first support. And here we're using a Fibonacci extension, okay, which is in the hundreds. Okay, and my 61.8 also lines up. And so does my 78.6. So I'm just gonna keep those two. Okay, I think I'll get rid of this. Okay, I think that's all the levels that we have. Okay, I want to. Okay, my 161.8 kind of lines up with my second resistance as well. Okay, so I'm just gonna highlight it because it's also in line with a 78.6. Okay, I think that's about it. Okay, so we're gonna go in with a buy from our first resistance towards our second resistance. But of course, because our first resistance is in line with a bunch of other Fibonacci levels, so we will probably see price testing this level a little bit. Okay, especially since it's also an overlap level. So we'll see it test it a bit before shooting up towards our second resistance. Okay. Price is moving above the Ichimoku cloud, so it's giving us a bullish signal. MACD is also giving us a bullish signal. Let's look at RSI and stochastic. Um, these aren't really telling us much. Let's take a look at our moving averages. Okay, price is moving above both of our moving averages. So that's a good sign. It's bullish. And we can see on our Bollinger, price is moving above the upper band. So it's also giving us a bullish signal. There's a lot of upward pressure here, as we see from our other time frames, as well as our indicators here. So we can expect it to continue to push towards our second resistance. Okay. Okay. Do you guys have any questions or anything else you'd like me to go through? Yeah, I can go through one more. Yeah, we can do the XY really quickly. So this will be our last chart for today. Okay, let's so you can see on our weekly time frame, prices are pretty I mean it's kind of ranging, but it looks like prices are dropping here. And our daily time frame also makes it look like it's kind of dropping. But let's take a look here. Okay, so here I'm gonna place my first support, and then my first resistance would be over here. Okay, in line with the swing low and swing high. So it's a overlap level. And then my second support would be maybe just over here. Okay. Now let's go in with some Fibonacci levels again. Um, hmm. Okay, I see price testing our 50% level here. So I'm just gonna keep our 50%. Okay, and then mm, here we kind of see this 78.6 lining up nicely with our first support. I think this 61.8 is a bit too far. Okay. Okay, and then hmm. Okay, I think that's all the levels we have, but we see this confluence area here. Okay, so we can expect some resistance off here, which you see is already happening here. Okay, so we're expecting prices to shoot up from this level here. Let's look at some indicators. Okay, okay. Okay, it's pretty bearish on both MACD and Ichimoku. Let's look at, okay, pretty bearish as well. Okay, maybe, okay, let's take a look at this on our 4-hour time frame. Okay. Yeah, so on our 4-hour time frame, we definitely see prices kind of reacting off of our first support as well. So yeah, we can definitely still expect prices to continue to increase towards our first resistance. Okay. I think after our first resistance though, we'll probably see prices continue to drop after that. Yeah, and because this first resistance is a pretty significant swing high resistance, and we can see price has tested it before. Okay, so it's likely going to attract price here. Okay, at this level, and then we'll see price react off of it and continue in the downtrend. But for now, we can expect price to bounce off of our first resistance like it already is and hit towards our first resistance. First support, I mean. First support, bounce off of first support and hit towards our first resistance. Okay, that's all the time that we have for today. I hope you guys found this helpful and I will see you guys next week. Have a great rest of your week, everyone. Bye.